Welcome back. It's JWalter here. I have a very important update to share with you guys today because investor purchases of real estate reached all-time highs. I'm going to be sharing why investors are buying houses right now and also the implications this has for people looking to buy a house to live in. And before we get started, I did a lot of research about what is really going right now so I can deliver this to you guys. So if you wouldn't mind, please hit the like button. I greatly appreciate that. And also consider subscribing if you haven't done so already. Also, if you're looking for a real estate agent referral from virtually anywhere in the US, then check out homeandmoney.com/Jason to get connected with a great real estate agent in your neck of the woods. So with that said, let's begin today's video. So the first article I want to share with you today is from Redfin. They actually just announced this today at the time of this video, which is February 16th. They announced that real estate investors are buying a record share of US houses. So real estate investors bought a record 18.4% of the houses that were sold in the US during the fourth quarter of 2021. And that's up from 12.6% from 1 year ago. So in the span of 1 year, the percentage increased by about 6%, a pretty big increase. That's about a 50% increase compared to 1 year ago. As you can see here, the investor purchases hovered around 10% or less all the way until we hit 2010. 2010 more or less was the bottom of the market. Home prices tanked and investor purchases increased greatly, as you can see here. But what happened during this pandemic, obviously the pandemic was in early 2020. Ever since then, investor purchases decreased quite a bit in the first quarter, or I should say the second quarter of 2020. But ever since then, investor purchases have been absolutely skyrocketing to levels we have not seen ever. So 18.4% in Q4 compared to 12.6% 1 year ago. And by the way, Redfin defines an investor as any institution or business that purchases residential real estate. And when we refer to record in this report, the records date back to the first quarter of 2000. Redfin started doing this data back in the first quarter of 2000. In any case, although investor market share hit a record in the fourth quarter, the number of homes bought by investors declined by 9.1% from the third quarter peak, but it's up significantly from pre-pandemic levels. Investors bought just over 80,000 houses in the fourth quarter. That's up 43.9% from 1 year ago. So have a look at this. The all-time record high was basically in 2017 or 2018 when we had just over 60,000 houses that investors purchased in the US. Now, ever since this pandemic started, that has been skyrocketing. So in the third quarter of 2021, we reached all-time highs of 88,000 houses that were sold. Now we're at 80,000. So it just goes to show how pre-COVID, how much investors are gobbling up single-family houses in the US. So again, up from just over 60,000 to now over 80,000 houses that were purchased by investors. Investors are taking advantage of intense demand for rentals and increasing prices, with the average monthly rental payment for a new lease up 14% in December. So let's now discuss the cities in the US that have the highest share of investor purchases and which ones had the lowest. So according to Redfin, investors had the biggest market share in relatively affordable Sunbelt metros. So in Atlanta, for example, 32.7% of houses that sold in the fourth quarter were bought by investors. That means that 3 out of every 10 houses that were purchased in Atlanta were going to investors and not people looking to move into the house, not owner-occupied individuals. And that was the biggest share of the 40 US metros in this analysis. And in Charlotte, it was 32%. That was followed by Jacksonville, Florida with 29.8%, then Las Vegas and Phoenix. So investor purchases more than doubled from last year in Jacksonville with a 157% year-over-year increase. That is absolutely insane. And that was the biggest jump of the metros in this analysis. That was followed by Las Vegas, Charlotte, and Baltimore and Atlanta. Investor purchases increased from the year before in all but 4 of the metros in this analysis. So at the bottom of this list that have a decrease of investor purchases were Seattle, Nassau County, New York, Newark, New Jersey, and Warren, Michigan. Now, I did a lot of research regarding this. I was trying to figure out, and mortgage rates have been skyrocketing. One would assume that would cause home buyer demand to decrease. And also we're at almost all-time highs for home prices. So I was trying to do some digging about why investors are buying houses right now so I can give that to you guys. So here is the answer about why investors are buying single family houses in great numbers. And this is a report I found from CoreLogic. They actually just posted this yesterday. They announced that single family annual rent growth finishes 2021 at a new all-time high. So US single family rent growth increased 12% in December of 2021. That was the fastest year-over-year increase in over 16 years. So investors are buying single-family houses and they're renting out those houses at all-time highs. And that's why they're buying houses in great numbers. I have some more data to share regarding this as well, and some other reasoning as well. So the December 2021 increase was more than 3 times the December 2020 increase. Pretty astonishing. Rent growth continued at a rapid pace for all price tiers in December as well. So they have a low price tier and a high price tier, and in both of those tiers reached all-time highs. So in the low price tier, rent increased 11.2% year over year, whereas the high price rentals increased 11.9%, the fastest increase in their history of looking at this data. So have a look at this. This is National Single Family Rent Index year over year percent change by price tier. So they're looking at how rents have increased year over year. And take a look at this. So ever since, let's say 2011, the purple here is their index overall for the nation. So the index there hovers around 3 to just under 4%. It dipped in 2017 to around 2.6, 2.3, and then it kind of leveled off again to around 3%. Then the pandemic hit, and then rent increases went up dramatically. So 3%, 3.8, 3.8, 5.2, 6.4. By the way, these are year over year percent increases. 7.6, 8.5. Every single quarter, the rents increase drastically, and now we're at about 12% increase compared to 1 year ago. And this is why investors are buying houses in great numbers right now. So annual rent growth for detached rentals, meaning single family houses, for example, they're not detached to the next unit like a condo or a townhome, for example. Those increased by 12.1% in December compared to 11.4% for attached rentals. So the rent growth on detached houses are increasing at a greater pace than condos, apartment buildings, townhomes, for example. What I found to be very interesting is that they noted that earlier on during this pandemic, a lot of people went after or tried to find rental properties in less dense areas. And you can see this here when the pandemic hit. So this is rent growth for detached properties compared to attached properties. So single family attached properties versus detached. So take a look at this. So the pandemic hit, the rent growth for attached properties only went up by 0.7% compared to 1.8%. And that gap was about 2% to 3% for many quarters until it started to slow down. So the gap really decreased more recently, right? So in June of 2021, it was about double the pace for single family houses that were detached. But now we're very close. We're only about 1% difference. So I thought that was very interesting. It just goes to show how rent growth is increasing in low density areas and also in high density areas as well. But the pace of attached houses are increasing at greater rates. So here are the top 20 US metros that had the highest increase in rents compared to 1 year ago. Topping the list was Miami, Florida. Take a look at that, a 36% increase in rents compared to 1 year ago. Far above any other city we see in the US here. Phoenix was second place, Orlando, Las Vegas. Austin, Texas had about a 16% increase year over year. And you can see these other cities here as well. So yet another reason why investors are purchasing single family houses right now in big numbers is due to this. So this is a report I found. This is on Zumter's website. In metro areas where single family houses are the primary form of housing, rent has risen at breakneck speeds as skyrocketing home valuations price out more and more renters who would otherwise buy. So they're basically saying is that home prices are increasing at very high levels, and that's causing a lot of people to put their brakes on buying a house, and they're going to rent instead, and that's what's driving up rent prices as well. So have a look at this. This is according to Redfin. I actually looked at new listing median prices. So this is the asking prices that people are asking for their houses when they're listing their houses for sale. So take a look at this. This is the black line here is 2022, a 13.8% increase compared to 1 year ago. Here's 2021, 2020, and 2019. So right now we're at very high levels. The median asking price in the US right now, at least as of the end of January, was $369,000. In 2021, it was around $325,000, and in 2020, $300,000. In 2019, it was about $280,000. So in 3 years, it went from $280,000 to now $369,000. So in 3 years, it went up almost $100,000, and that's why rental prices have been going up as well. Here's something I also want to share with you guys, and this is really kind of mind-blowing. I found an interview with Invitation Homes CEO regarding why are they buying houses, and here's what they had to say about that.
Nonetheless, the last quarter you were able to buy, looks like a little bit more than 1,500 homes for $656 million.
They bought over 1,500 homes in the last quarter alone, and they're buying houses and converting those to rental properties, which is further causing supply for owner-occupied people to decrease.
Are you still able to keep acquiring homes at the pace you would like?
We wish we could buy more, truthfully. I mean, demand is just...
See that? They wish they could buy more. Have a look at this.
So large for our product in terms of people wanting a leasing lifestyle.
They're saying that demand is so high for people wanting a leasing lifestyle. I don't know anyone who really wants a leasing lifestyle. Most people want to buy a house. In any case, he's sharing that supply is very, very low, and people are looking to rent and because of home prices being so high. But have a look at this, what he had to say.
What we've started to do is really work with builders. We announced a partnership with Pulte last year. We're going to build almost 8,000 new homes over the next.
See what he had to say there? They are partnering with a home builder who are going to be building houses, and they're going to be renting out these houses. This is pretty remarkable. I have some news regarding this I'm going to be sharing here in just a little bit.
Starting to see some of that come into our business, but supply is definitely tight. But we're risk-adjusted return.
So supply is very tight. So they're actually going to home builders saying, hey, can you buy some houses? We want to rent them out, rather than us going on the open market and trying buying houses that are for sale. So have a look at this. So new lease growth for Invitation houses has increased 17% year over year. Also, their vacancy rate is very, very low, about 2%, and the turnover is very low as well, so 5%. So I did some digging for you guys and wanted to get some more information about this partnership with this home builder. So here, have a look at this. This is announced in July of last year. They said Invitation Homes, the nation's premier single-family home leasing company, and Pulte Group, the nation's third largest home builder, announced today the formation of an innovative strategic relationship. As part of this relationship, Invitation Homes expects to purchase approximately 7,500 new houses over the next 5 years that Pulte Group will design and build expressly for this purpose. So they're basically going to be buying about 7,500 new houses from this home builder so they can lease them out. The companies have already reached an agreement on the construction and sale of over 1,000 houses across 7 communities over the next several years, with the first sales expected to close in 2022. Initial projects are scheduled for delivery in Florida, Georgia, Southern California, North Carolina, and Texas. The CEO of Invitation Homes had this to say: at Invitation Homes, we're committed to serving the growing share of Americans who are opting not to buy a house by providing high-quality houses with valued features such as a close proximity to jobs and access to good schools. So to me, the big takeaway here is that investors are very bullish about the housing market because rent growth is through the roof, supply is very, very low. And so what some investors are doing is they're going directly to home builders asking them, hey, can you build us some houses so we can rent them out? This is a big issue for people looking to buy a house and live in them, non-investors, because this 8,000 houses, for example, are going to an investor looking to lease out the houses and not to non-investors, regular home buyers looking to buy a house and live in that. And to me, this further causes the supply of houses for sale for people who are non-investors to decrease, and that could further increase home prices. That's my takeaway, but what is your takeaway? Thank you so much for watching this video, and also consider subscribing if you haven't done so already. Look forward to seeing you on the next video.